from the National Australia Bank. We've got David de Garis joining us. Good morning to you, David. Thanks very much for joining us. So why do we see the Australian dollar falling, do you think?
Well, I think the market had priced 70 to 75% chance that the Reserve Bank would hike. Maybe the market was just unrealistically expecting that the Reserve Bank statement might have given a little bit more guidance about the future of rate moves. They generally don't do that in their statement, but we will get a lot more colour about that on Friday. So it might have been a little bit of buy the rumour, sell the fact this time. But and we have had a rate rise today, and it looks, just having a quick look at the statement, that the Reserve Bank's inflation forecasts have been upgraded, and they now see the bottom of the trough in inflation as being in the top half of their 2 to 3% range. So that's higher than what they were expecting 3 months ago.
Now, you heard Heidi talking about Australian property prices heating up. There are reports that prices have risen by as much as 20% in Sydney. You know, will this rate hike burst that that bubble?
Well, I think in time it will certainly slow the rate of increase of house prices, but underneath that we have a very strong population growth factor that's still very dominant. So, and a net undersupply of housing in Australia. In the past 5 years, housing investment has really been less than average, and what housing investment there has been, a lot of that's been going into upgrades. So Australia is still short of housing, but you're right, as rates go up, that will quell the demand for housing, and that's bound to happen with mining investment, bound to take a larger slice of national GDP over the next 2 to 3 years.
Now, this rate hike comes just 48 hours after the government announced the super mining tax. Now, that in itself is going to cool the economy down. Is a rate hike perhaps overdoing it here?
Look, I think, you know, the super profits tax on the mining sector might take away some of that prospective mining investment 2 to 3, maybe 4 years down the track. But right now the Reserve Bank's got an immediate issue, and that issue is prospective growth over the next year to 18 months and what that might do to the inflation rate. So while mining investment further out might be quelled somewhat, in the next year or so it's going to be very strong. And commodity prices right now are going through the roof, particularly for coal and iron ore.
All right, David de Garis, senior economist there at the National Australia Bank. Thanks very much for joining us.